Imagine getting like a direct line into a company's financial core, not just the headlines, right?
Oh, yeah.
But really understanding the numbers, the strategy, what it all means.
Exactly. Going beyond the surface level.
That's what we're doing today. We're taking a deep dive into Coromandel International Limited's Q1 FY26 results.
Yep. Pulling out the key insights from their latest releases, presentations, board updates, the whole package.
Basically, it's your shortcut to getting properly informed about a really key player in the whole agri-solutions market.
We've got the official stuff here, the investor presentation for Q1 FY26, the press release, the board meeting outcome from July 24th.
And we even have this list, like over 60 questions people are asking about these results, so that's kind of guiding us to make sure we cover what you want to know.
So be comprehensive.
Okay, let's unpack it then. Looking at the consolidated results for Q1 FY26, what numbers, really jump out straight away? What are the headlines compared to last year?
Well, the first thing you notice is just strong growth across the board. Consolidated total income for the quarter ending June 2025, it hit our 7,126 crores.
Okay. And how does that stack up?
That's up from Artist's 4,783 crores in Q1 last year, so a 49% jump. Pretty significant.
Wow, nearly 50% growth in total income. That is remarkable. But, top line is one thing. What about profitability? Did that follow?
It did, actually. And even more impressively, consolidated profit after tax BATI that surged to, it reached Rs 502 crores this quarter.
Compared to
Rs 309 crores in Q1 FY25. So that's, 62% growth on the bottom line?
62%.
Yeah. And the consolidated EBITDA, that's earnings for interest, taxes, depreciation, amortization, that also grew strongly, of 55%. Went from Rs 396 crores to Rs 782 crores.
And the margin?
They maintained an 11% EBITDA margin, which is pretty solid given the growth.
So, okay, strong numbers on the surface. But that 62% EBITDA growth, how sustainable is that? What's the bigger story here about the company's overall health?
All right, good question. If you look at the management commentary, Mr. S. Shankar Subramanian, the MD and CEO, he gives some context.
What did he say?
He said, Coromandel made a strong beginning to the season. He talked about growth across businesses being driven by procurement efficiencies, operational excellence, effective marketing.
So internal factors.
Internal factors, yeah.
Yeah.
But he also pointed out the external help of the early monsoon. That boosted crop sowing and demand for agri-inputs.
Okay. So a mix of good management and good conditions.
Exactly. And that speaks to the sustainability you asked about.
Yeah.
It's not just luck. Now, the question of input costs, raw materials,
Yeah.
that's always huge in this sector.
How do they manage that?
Well, the documents don't spell out every single strategy, but maintaining that 11% EBITDA margin while growing so fast, it suggests they are managing procurement really effectively, like the MD said. That points to a real core strength.
And their debt position.
That's another key point. The investor presentation shows net debt to equity at 0.0 times. Basically, no net debt.
Zero. Wow.
Zero. Same as last year. That gives them a huge amount of financial stability, a buffer against, whatever the market throws at them.
Okay, that makes sense. So with that strong overall picture, let's break it down. Where did this growth actually come from? They've got two main segments, right?
Yeah.
Nutrients and crop protection.
That's right. And the nutrient and allied business was, it was the main engine this quarter.
How'd it do?
Standalone revenue for Q1 FY26 was Rs 6,311 crores. That's up 50% year on year from Rs 4,198 crores.
50% revenue growth in nutrients. Okay, profitability there.
Profit before interest and tax PBIT for that segment also grew strongly, up 46% from Rs 436 crores to Rs 637 crores.
So nutrient business really powering things. Were there specific products or, areas within that segment that stood out?
Yeah, definitely. Their phosphatic fertilizer business, so that's things like NPK and DAP, saw volume growth of 31%.
31% volume growth. Solid.
Very solid. And the investor presentation breaks down the sales volumes. What really jumps out is the imported NPK and DAP sales.
Imported. How much?
Up, wait for it, 676.6%.
Whoa, 676%. What's behind that massive jump in imports?
It suggests they were incredibly responsive to market demand, right?
Mm-hmm.
Maybe seeing an opportunity with pricing or supply for imports compared to domestic stuff. Really agile strategy there.
Interesting. And other fertilizers?
SSP sales were also up 20.3%, and urea sales increased by 23.5%. So broad strength.
And supply side, you mentioned raw materials earlier.
Right. They confirmed their rock phosphate project in Senegal is stable now and consistently feeding their plants in India. That's key for their own phosphoric acid production. Big tick for raw material security.
Okay, makes sense. So that's the nutrient powerhouse. What about the other segment, crop protection? Smaller but important strategically.
Yeah, smaller, but it also delivered really robust results, showing good progress. Standalone revenue hit Rs 724 crores.
And the growth there.
That's up 31% year-on-year from Rs 551 crores. And the PBIT growth was even better, up 75% from Rs 63 crores to Rs 111 crores.
75% PBIT growth in crop protection. Okay.
Yeah, the press release says that was driven by strength both domestically and internationally. So broad demand for their solutions.
Any new stuff happening in crop protection, new products, innovations, that's often key for future growth there.
Yes, actually. They launched 10 new products during the quarter.
10 in one quarter.
Yep, including an in-licensing molecule and three 9(3) formulations. Basically, new types of pesticides hitting the market under specific regulations. It definitely strengthens their portfolio and, their future pipeline.
Okay, so the two main pillars are strong. What else contributed? Any other areas that chipped in?
Well, their retail business is one to watch. It keeps expanding aggressively. They added over 70 new stores just this quarter.
70 stores. Wow, what's the target?
They're aiming for 1,200 stores by the end of the year. That direct farmer reach is a big advantage.
Definitely. Any other businesses?
Yeah, the specialty and organic, bio, nano fertilizers, and the Gromer Drive businesses. These are more niche, high-value areas focused on integrated crop management. They also delivered, quote, robust set of numbers.
So diversification is paying off too.
Seems like it. It really strengthens their whole integrated approach and positions them for, future trends towards more sustainable farming.
Right. Now, this is where it gets really interesting for me, the long game. Beyond these, impressive quarterly results, what strategic plays are they making now to secure the future, grow market share long term? What are the big expansion plans, the new initiatives?
Okay, yeah, there are some really key strategic moves. The big one highlighted in the board meeting outcome and press release is about Senegal.
Senegal again, what now?
They acquired another 17.69% stake in Bobab Mining and Chemicals Corporation, BMCC.
Ah, the rock phosphate source. How much did that cost?
About $7.70 million. And this pushes their total stake in BMCC up to 71.51%.
Over 71%. So clear majority control now. Why is this move so significant strategically? What does it really unlock for them?
It's all about raw material security, deepening that backward integration. The MD, Mr. Sankar Subramanian, explicitly called it a strategic move to further strengthen our backward integration in the phosphates value chain.
Backward integration meaning owning more of the supply chain.
Exactly. From digging the rock phosphate out of the ground in Senegal right through to the final product, it cuts their reliance on, potentially volatile external suppliers for that key raw material. Stabilizes costs, ensures supply.
Makes sense. And BMCC itself is growing.
Significantly. Its turnover went from about Rs 33 crores in 2022 to nearly around 43 crores in 2024. So it's becoming a more important source for them.
Okay, so securing the upstream in Senegal. Are there other backward integration projects happening closer to home in India?
Yes, definitely. Their projects for phosphoric and sulfuric acid plants at Kakinada are moving along well.
When will they be ready?
Expected commissioning is Q4 of this fiscal year, FY25-26, so not too far off. That lets them produce more of those crucial intermediates themselves.
More self-reliance.
Precisely. And they've also started groundwork for a huge new fertilizer granulation facility at Kakinada, 7.5 lakh tons capacity. That's a big boost to domestic production capability.
Okay, so producing more. What about getting it out the door? I think I saw something about a bagging plant. Seems like a small detail, but maybe not.
Good catch. It's actually quite significant operationally. The board approved 137 crores for a new bagging plant at Kakinada, capacity of nearly 3,900 metric tons per day.
Why bring bagging in-house?
The rationale is clear. Cut operational costs, smooth out logistics, improve quality control and surveillance over the packaging. Basically, taking control away from outsourced providers gives them more efficiency and an edge.
And the timeline.
Expected completion within 18 months. So another clear part of the plan.
Okay, so lots of internal strengthening. Any big external partnerships or diversification moves that signal where they're heading?
Yes, two stand out. First, they signed a long-term deal with Maiden.
Maiden, the Saudi fertilizer giant.
That's the one, for securing DOP shipments into India. So another move to lock down supply, this time for finished goods imports.
Smart. And the second one?
This one's quite innovative. They've set up a joint venture with Sakarni Plaster.
Sakarni Plaster. What's the connection?
They'll manufacture and market green building materials made from phosphogypsum.
Phosphogypsum. Isn't that a byproduct from fertilizer production?
Exactly. It can be a waste headache.
Yeah.
So turning it into a valuable product like green building materials, that's brilliant. It's diversification, it's circular economy, it taps into a whole new market using something they already produce.
That is clever. Okay, let's zoom out a bit now. How does Coromandel's performance stack up against the wider Indian fertilizer industry in Q1? What were the overall market trends?
Yeah, the investor presentation gives us that context, and it's a really mixed picture, which actually highlights Coromandel's success, I think.
How so? Mixed in what way?
Okay, take DAP. Domestic production grew slightly, 3%, but imports fell 13%, and overall sales actually declined by 19% year-on-year for the industry.
DAP sales down 19%, but Coromandel grew strongly.
Exactly. Now contrast that with NPKs. Industry production up 6%, imports surged 48%, and sales grew 34%. So NPK was hot.
Okay, what about urea?
Urea. Production down 10%, imports down 13%, but sales still grew 12%.
Interesting. And MOP?
MOP is wild. Imports plunged 71%, but sales grew 46%.
Wow, okay. That really is a mixed bag. What causes such different trends for different fertilizers? MOP imports down 71% while sales are up. How does that work?
Great question. It suggests really different dynamics at play for each nutrient, doesn't it? Maybe that MOP trend points to drawing down existing inventory significantly. Or maybe farmers shifted preferences based on local price or availability. It shows you need to navigate each segment carefully, which Coromandel seems to have done well.
Definitely complex, and subsidy is always critical in fertilizer. What's the situation there in Q1?
All right. The nutrient-based subsidy, or NBS rates, for the first half of FY26 were provided. N at RS 43.02 per kilogram, P at 43.6, K way down at 2.38, and S at 2.61.
And the outstanding amount, the money owed by the government?
That did increase. As of June 30, 2025, the total outstanding subsidy was Rs 2,911 crores, up from about Rs 1,970 crores a year earlier.
So more delays across the industry.
Potentially. But here's the positive for Coromandel. They received Rs 1,300 crores in subsidies during Q1. That's actually up from Rs 987 crores they received in Q1 last year.
Ah, so even if the overall pile is bigger, they seem to be getting their share effectively. That's important for cash flow.
Absolutely vital.
Okay, shifting gears slightly. Beyond the financials and market stuff, what about just how they run the business? Operational efficiency and sustainability, that's increasingly important, right?
Yeah, good points. The press release specifically mentions their plants operated close to full capacity.
Which
means really high operational efficiency. They're sweating their assets, getting the most out of their existing infrastructure. That flows straight to the bottom line.
Makes sense. And sustainability.
They continue to highlight their efforts there. They mention recognitions from the UNDP, being voted one of India's greenest companies by TREI.
Yeah.
It's clearly part of their narrative.
Is it just talk, though?
Well, they back it up by pointing to their 7 R&D centers and strong regulatory setup. It suggests real investment in innovation, including, bio-based and eco-friendly products. It shows they're thinking long-term, beyond just the next quarter's numbers.
Right. Okay, so we've really covered a lot of ground here on Coromandel International's Q1 FY26. From that, really impressive top and bottom line growth.
Yeah, through the segment drivers, especially that nutrient business.
And diving into those big strategic moves, the backward integration, the new plants, the partnerships.
It paints a picture of a company that's not just performing well now, but actively building for the future, making some aggressive, calculated bets.
Okay, so let's leave our listeners with a final thought to chew on.
Right. Look, Coromandel's making these big moves in backward integration, boosting the Senegal mine stake, building out Kakinada for production and logistics. It's clearly about securing their own raw materials, controlling their supply chain.
For their own competitive advantage.
Yes, but think bigger. How might these strategic decisions, locking up raw materials, boosting efficiency impact not just Coromandel's own edge, but the wider Indian agri-solutions market?
Yeah.
Could it affect overall price stability, farmer access, affordability of these crucial inputs down the line? It's something to watch.
Interesting question. Lots to think about there. So what stands out most to you from this deep dive into Coromandel's results? We hope this has given you a real head start on being well informed.